Ladies and gentlemen, welcome back to the channel. We got a lot to talk about in a very short amount of time. Number one, analyst over at Riley Securities has given a earnings forecast for AMC stock over the next coming quarters, which is the first positive earnings estimate or projection that we have seen in a very long time, since pre-COVID. So I'm excited to bring you guys that situation, as well as I want to talk about key levels on AMC stock, what happened today, what's going to be happening tomorrow, as well as the data behind AMC stock as well. Much more than that, but that is the punchline that I will give you for the intro of this video. Hit that like button and subscribe to the channel. Stores your comments, questions, or concerns down below in the comment section, because today is going to get crazy here in after hours and tomorrow morning. So you guys definitely want to post your opinions. But this collateral crisis, let's start off with that one. So today, I discussed this in the last video. Fed Williams says they are not done raising rates if they need to. Why did he say this? Well, Fed Williams tends to be one of the more bullish Fed members and really stressed the need for a potential pause, right? That they're getting inflation back to normal and it's coming down and the economy's doing, okay, but it's a little bumpy, right? That's what you've heard from Fed Williams this whole time. Now he comes out and says this. Not good. He also said, no reason to cut rates this year. Well, why is he saying these things? Why is he preparing you for harsher Fed policy, for more aggressive Fed policy? Well, Fed Jerome Powell was asked 2 Fed meetings ago if he gets special reports such as the employment report as well as CPI reports before they are released to the public. And I was surprised he actually admitted yes to this. He says usually a day or two before the Fed will get an important report, right? Again, CPI report or labor market reports. So they kind of have a heads up of what these numbers are going to come in as. Well, we get CPI coming tomorrow. So if Fed Williams is making these kind of statements today, they're kind of trying to brace the markets for bad news coming tomorrow. So I don't think that is good, because this market is solely based off of Fed rate cuts. 3 to 4 Fed rate cuts by the end of this year. If not, stocks would be in the gutter right now. They're trading based off of Fed rate cuts as if they are a certain thing to happen. Now, if the Fed does cut rates, that's going to be a problem. Investors are starting to expect the Fed to cut rates as early as July. You are seeing, as of now, a 77% chance of a pause in June, 22% chance of a rate hike in June. But for July, about 31% of investors are expecting the Fed to cut rates. Why would the Fed be cutting rates around this time? Well, it would likely be due to the debt ceiling. The last time we had a debt ceiling crisis was 2011, where the United States did not default on their debt, but they came very close to it. I think it was like 11 hours, or the 11th hour is what they called, when they actually got an agreement. The S&P Global downgraded American debt. Stocks fell 6.5% the next trading day. I think that's worthy of giving you a Fed rate cut. Well, that's what markets are starting to expect. Without that, you're not going to get a rate cut, right? And that's what Fed Williams says. No reason to cut rates this year, as long as, obviously, debt ceiling talks and, discussions go the way that we hope they do. And that would be them raising the debt ceiling, unless you are ultra bearish and you hope the economy goes into a recession. If that's you, then you would hope for no debt ceiling getting raised. But nonetheless, that's what the markets are currently attending with today. Now, Biden is meeting with McCarthy in after hours trading today about 4 p.m. right after the bell to discuss the debt limit, but McCarthy already said he rejects short-term debt limit fix ahead of pivotal meeting with Biden and congressional leaders. So coming tomorrow, let's just imagine here. You get a bad inflation report. You get bad news from the debt ceiling. It looks like they are far off, right? Janet Yellen even came out on CNBC and literally said it does not look like a deal is close and it would be economic catastrophe. Words the stock market don't like as a whole, right? Just imagine that for me. But imagine at the same time hedge funds are hedging out their portfolios by shorting AMC stock, a stock that has done the opposite more times than not to the broad markets in 2023, meaning that more times than not, if the markets are down, AMC has been up in 2023. More times than not, if AMC is down, the markets have been up. in 2023. So if you think the markets are going to fall, why would hedge funds be shorting AMC? Well, it's a practice of commonality. This is what they did in 2022. This was their favorite thing to do. Short AMC, because AMC would fall more than the markets and you would hedge out your portfolios. Well, that's likely not going to happen this time around. Right? Probably not as likely. AMC stock, in spite of potentially facing massive dilution, is going higher, is up 35% in just a couple weeks. That's pretty interesting. So I think it's a very valid argument that AMC stock could fuel a collateral crisis. If shorts are shorting AMC and AMC stock goes higher, at the same time their portfolio values are dropping, that creates a collateral crisis. That's why stocks such as Volkswagen short squeezed when the markets were falling. It wasn't because Volkswagen looked any more bullish then than they did months before or after. It's because credit was drying up. It was you couldn't go take out more margin. You're already margined up to the damn teeth, right? You already pledged your stocks as collateral. Now those stocks have lost a lot of value. That's a problem. And let me just break this down for you, those of you guys that don't know what I'm talking about. So if you had a $100 million short position in AMC, let's just call it that. And let's say you pledged $100 million worth of Apple stock. Well, if Apple stock now falls 20%, you got to put more Apple stock into your AMC short position, right? Because that's just how it's got to work. If AMC stock goes higher or your collateral drops, you got to put more in. Now let's factor in AMC stock. Let's say AMC goes up 20% and Apple drops 20%. You got to put over 40% more collateral into that position for AMC. That's rough. That's hard out here for a trader. Hard out here for a pimp. So that's kind of the situation that I think could unfold as the markets do get closer to actually falling and the situation becoming a bigger problem. Nonetheless, we are currently seeing the estimated short interest of free float at 25.02%, 129.21 million shares that are currently sold short, 306% cost to borrow fees, cost to borrow max 336%, cost to borrow minimum at about 47%. Interactive Brokers has 145% cost to borrow fee, 300,000 shares that currently are available to be traded. Option activity, very negative here on the day. Do we need to go into that? 0% positive order value. And if you look at AMC on a technical basis, key downside levels of support, 50 and 100-day moving averages at about $5.21 per share. Major resistance levels, $6 per share. Shorts are scared shitless of $6 per share. Every rally in AMC that has been a momentum-driven rally, meaning that AMC rallies within a week or two like 100 to 300%, has happened after a break to the upside of $6 per share or finding support at $6 per share. So $6 per share is a major squeeze level. Nonetheless, thank you guys for watching. That is going to do it for this video. We covered everything else you guys need to know in the videos earlier today. So go and watch those ones for more detail on what happened today and what we expect to happen tomorrow. Nonetheless, hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys also want to come trade with me live in real time, link down below in the description of this video as well. Thank you guys for watching, and I will see you in the next one.